What's up everyone, it's Scotty with MoneyVest. So today we're going to be talking about Applied Materials, ticker symbol AMAT. A lot of semiconductor stocks have done absolutely well, incredibly well in fact, over the last couple of years as the boom in artificial intelligence continues. So in this video, I wanted to break down another very prominent player in this sector called Applied Materials. As we know, there's a lot of other companies that belong to the different ecosystem, different parts of the entire supply chain, with ASML providing the lithography equipments, AMAT providing a lot of the wafer fab equipment and ultra thin layers to produce the chips, NVIDIA and AMD, of course, the designers of chips, TSMC, the manufacturer of chips. There's a lot of players in the entire industry that are benefiting from this advancements in artificial intelligence. And as we have seen, a lot of booming momentum here for a lot of these companies, with NVIDIA leading the way at over $3 trillion in market cap. But there's a lot of potential in other parts of this entire market. I've done videos on Qualcomm, I've done videos on ASML, I've done videos on TSMC, I've done videos on Advanced Micro Devices, and I've also done videos on Applied Materials. But this again is going to be a more detailed video on the entire company using our very own MoneyVest platform to really understand the entire business model and, more importantly, the numbers behind the company itself. So hope you all enjoy this video and find it helpful. Make sure that you drop a like and subscribe to the channel if you're just joining us for the first time. A very happy 4th of July to everyone. Happy Independence Day to everyone over in the US. We've got a huge sale. All educational courses are 60% off with coupon code July4, including all bundles, where you can get over 60% off using the coupon code July4. And also do check out our MoneyVest platform if you want to analyze all these individual stocks, do a full in-depth fundamental analysis on companies. Links going to be down below. Right now there's a 51% discount and you'll get early access to the platform, and we're going to be doing our beta launch in about 4 days. So July 8th is when we've got the beta launch scheduled for. So again, links going to be down below. The first things first, let's talk about the growth thesis for Applied Materials here. So they believe the semiconductor sector is going to outgrow the GDP, and the fab equipment grows as fast or faster than semiconductors, and Applied Semi Systems outgrows the fab equipment market, and Applied Global Services grows as fast or faster than Semi Systems as well. And this right here is going to be their operating model, where they need to, or they're going to invest heavily in R&D, in design, in manufacturing, and of course services, which is going to help them generate again more free cash flow, which they can then allocate towards more growth in dividends per share and repurchasing shares as well. Speaking of, they've increased their quarterly dividend every single quarter very, very well. So 25% increase in fiscal year 24, and shares outstanding have also gone down significantly. So there's been a lot of share buyback and a lot of dividends issued to investors as well. Two of the really important, very beautiful things that we like to see. And compounded annual growth rate over the last 10 years, they've grown revenues by over 13% compounded annually, with over 30% growth in non-GAAP earnings per share, 33% free cash flow growth, and 12% dividend increase per share, with return on invested capital going from 8% to 35% and reducing the net shares outstanding by over 30% in a 10-year period as well. So coming over to this, so this right here is going to be the entire Applied Materials page on the MoneyVest platform. So again, if you want to get access to all of this, link's going to be down below. It actually scores really well, 4 out of 5 M score, with a $203 billion market cap for the company. And the beautiful thing about this platform is that we've got something called the MoneyVest metrics, which are essentially broken down into 5 categories, and we've got a M score for every single category. So growth, it scores a 4.61. If you go to a 10-year analysis, AMAT scores a 4.72, so even higher than what we've seen before. And then we've got a profitability table of 4.5, efficiency of 3.8, we've got financials of 4, and then valuations a little bit lower at 3. So if we start plotting in for these numbers, you'll notice that they've actually grown across the board. And what AMAT mentioned for revenue growth of over 13%, that is indeed true. So you can see that revenue has grown at 13.45% over a 10-year period. Very, very strong. Gross profit 15%, operating income 26%, free cash flow at 33%, which is exactly what they mentioned, and earnings per share also at over 44%. So very, very high growth across the board for these numbers. You can also start plotting in for these numbers and see that for yourself. So now we've got revenue, we've got gross profit. Let's plot in for operating income, net income, free cash flow as well. And this right here is the overall growth in the company's fundamentals over the last 10 years. Very, very strong growth coming in. So gross profit also going from about 3.8 billion to now sitting well over 12.3. Operating income has gone from 1.4 billion to over 7.6 billion. That is absolutely incredible. And again, operating income, net income and free cash flow is also growing from 1 billion, 1.5 billion respectively to well over 6.8 and 7.5 billion dollars. So absolutely phenomenal growth. If you come down to shares outstanding, they've bought back at 3.6% every single year. So we've gone down from 1.2, 1.3 billion down to now 845 million. So very, very strong amount of share buyback for the company as well. When it comes to margins, they've expanded margins across the board. Gross margins have gone from 42% to now sitting 46.7%. Operating margins from 16% to 24%. Net margins from 11.8% to well over 25%, and free cash flow margins from 17% to over 28%. So you can see the growth across the board for all margins. Again, you can plot a lot of these numbers yourself and see that growth visually on the MoneyVest platform. Now, when it comes to efficiency, they've been mostly efficient, stable in terms of CapEx as a percentage of revenue. Operating leverage has been a little bit stable as well, but everything else is either efficient or highly efficient. And you can see the return on invested capital on average has been over 24%. It's come down a little bit, but it's been well over 30% for most years. So 30.86% as of 2023 and over 38% as of 2022. So very strong numbers there. And then if you come take a look at the balance sheet, the company's got more cash than debt on the balance sheet. So net debt is negative at over 3.4 billion as of 2023. So more cash than debt on the balance sheet. We can also confirm this number. So if you come over to fundamental analysis and if you're looking for quarterly numbers, you can also plot quarterly numbers. This is quarterly revenue, quarterly gross profit, operating income, net income, and EBITDA as well. And you can start to see the quarter over quarter numbers. You can go back as far as 20 quarters. That's 5 years worth of data for any company that you're looking to analyze. So 12 quarters, this has been the growth. And you can also plot for cash and debt if you want to on this. So if you come over to balance sheet, let's plot for total cash. It doesn't seem like we've got some long-term investments that we can also plot for, and then current portion of long-term debt and short-term debt. We've got a couple $100 million, and then we've got long-term debt at $5.4 billion for the company, which again is significantly lower than the cash on the balance sheet. Cash is at $6.2 billion as of the most recent quarter, plus the long-term investments of almost $3 billion. So we're looking at almost $10 billion of cash and cash equivalents and long-term investments, with long-term debt sitting at 5.4, which is half of the total cash and long-term investments for the business. So again, very strong numbers. And if you come over to free cash flow, this right here has been the free cash flow for the company. A little bit more unstable, but if you come over to the annual numbers, again, we're talking 10 years, very nice growth. You can also go back to as far as 20 years worth of analysis. You can see how consistent and how strong the overall numbers have been for the company. You can also plot for revenue, gross profit, all that stuff, and take a look at that for yourself and how consistent it's been over a 20-year time period. Now, coming over to the valuation, back to MoneyVest metrics and going back to 10 years and coming all the way down. If you take a look at valuations, it is still, 2023 basis at 19.5, price to sales a little bit over 5 compared to its 10-year average of 3.6. Then we got price to free cash flow at 17.7 compared to its average of 22 on a 10-year basis. And then we got price to operating cash flow of 15.4 compared to its 10-year average of 18. I would say it's still relatively okay. Again, we can get a better story here under ratios tab, because it's going to tell us the trailing and the forward multiples. And on a forward basis, price to earnings, AMAT is trading at 28.4, trailing 27.8, price to sales on a forward basis 7.3, which is again a little bit more expensive compared to its 5-year averages. And price to free cash flow all the way down here, trailing 12 months, we're looking at almost 30, and price to operating cash flow we're trading at under 26. So valuation is actually not that terrible for Applied Materials. And based on analyst estimates here, we've got a buy rating with a high target of 315, low target of 199, and an average target of 245, with a growth rate expected of about 12.29% on a 5-year basis for Applied Materials. So 12.29% with a revenue growth CAGR of 7.5% for the company all the way through 2028. So what we're going to do is we're going to plug in about a 12% growth rate. Of course, we know that the price earnings multiple on a forward basis is around 28. So maybe I can go up to as much as 25, see where the numbers land us. Discounted earnings multiple model, we're going to plug in that autofill for 5 years, and we're putting in about a 12% growth rate P multiple over the last 5 years, you can see it's been 18, right? So the reason for this autofill is to better understand the last 5 years worth of data. And last 5 years worth of data has been 17% growth and an 18 times P multiple. But if I go with 12%, which is a little bit lower, conservative here, based on analyst expectations, and slightly higher P multiple, right now it's trading at 28. I feel like it's going to come down a little bit closer to 20, maybe 24. So if you do with 20 here, same discount rate, margin of safety. However, we can actually go lower on the discount rate because the company does pay a dividend. So you can come down over here, and you'll notice it actually pays an EPS of course, $8.70 and a dividend yield of about 0.5%. So that obviously is not super crazy. That's 0.54%. So we don't really need to lower the discount rate all that much. So again, coming back to a 5-year analysis, 12 and 20. And if we hit calculate, keeping the share dilution same at almost 4%, we arrive at a fair value at about $181, which is going to be a 25% overvaluation for this stock, primarily due to the price to earnings multiple. You'll notice that if we actually hit a 25 times P multiple and then hit calculate, the fair value is only 7% lower than where the price is. So it's really just a price to earnings adjustment that we need to do, which is down to 20 based on conservative expectations here. And that would mean a 25% pullback needed in order for AMAT to be trading at its fair value at $181. Again, this is the sensitivity grid, which you can take a look and figure out that, okay, based on the price earnings multiple, based on the growth rate, what's the appropriate fair value for Applied Materials? Right now at $243, if you were to kind of figure that out and see where it is, we're going to be somewhere over here, 237. Then we got 258, so 234, 258. So in and around these here is 16 to 18% growth expected and a 22 to 24 times long-term P multiple for Applied Materials. But for me, I think 181 is going to be a reasonable price to watch for Applied Materials. Coming over to the technical analysis on this stock. So trading at about just over $243, of course, pretty much at all-time highs, on par with a lot of other semiconductor stocks here. Year to date, this stock is up 52% in the last 1 year, up 68%. So this right here is going to be a very, very strong area of support, which I'm going to go mark out. And another support sitting roughly down at 195 to 196. And this right here could be a very strong area of support. And exactly this level from back in April of 2024 was a level which, again, suggested as a very good fair value, intrinsic value for Applied Materials. So let me know your thoughts down in the comment section below. Trading at all-time highs, of course, just be a little bit more careful considering that, growth expectations are good. They are very solid. The fundamentals are phenomenal. The company's got more assets, more cash than debt and long-term liabilities on the balance sheet. So that is, again, very, very good. But fair value-wise, being conservative, that lands us somewhere around the $180 mark, which is going to be aligned with this support level over here from back in April. So let me know your thoughts down in the comment section below. As always, if you enjoyed it, found it helpful, make sure that you drop a like. Don't forget, we've got a 4th of July sale on all individual educational courses, as well as the bundle, coupon code July4. And also do join our beta launch. This is happening in 4 days. You can access the entire platform and lock in that 51% discount price for life until, of course, you cancel. So link's going to be down below. As always, happy investing. I'll see you all in the next video.